Hello everyone, you're welcome back. It's Chris here, and I'll be your friend, your host, and your tutor. So in this video, we'll be talking about shift of market structure. What is shift of market structure, essentially? So shift of market structure, as I would like to call it, is a method that can help you actually know when the market is about to continue or reverse. It is a very important pattern that the market actually shows all the time or most of the time. So it is very necessary that you know it because it's something that can actually help increase your edge. Now, this is not a strategy, it is not an edge per se, but it can help you in ways that you would not even expect. So let's get right into it. So what's the shift of market structure? I have made the term very simple so that I can actually elaborate what I mean. Now, a shift of market structure is simply a failed swing, right? A failed swing. So this is how it looks like for some of you who do not know. So let's say the market is making impulsive moves like higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then you know that for every, for this trend to exist, the higher lows must break above the higher highs. Now, a shift of market structure is a fail to swing above the higher high. As simple as that. A failure to swing above the higher high. That is for an uptrend. Now, this is what I mean. So price will come, and instead of breaking this high to continue a new, trend, price will come somewhere here or very close to it, and then price will drop, breaking this level. Right? Price will drop, breaking this level. So when that has happened, automatically what has happened here is a shift of market structure. Price was shifted, and it can be a very good indicator for a complete change in structure or a complete change in trend. It can also be a very good indicator for a continuation in trend, right? Now this is for an uptrend. Let me show you how it looks on a downtrend. So I'll quickly just invert this chart so that we don't waste our time. So this is how it looks on a downtrend, where the market is creating lower lows and lower highs, and then the market failed to break below. The market has failed to break below this lower low, came here and then broke this high. What has happened essentially is a shift of market structure. Now, how can it actually serve as a continuation, and how can it serve as a reversal? All right, so since you ask, so you can actually treat it, like I said, it's not a concept, it's not a strategy, it is just something you can actually add to, make up what you already know or add on to what you already know, right? So when this happens, it is an indicator. In fact, when I was teaching my students, it's one of the indicators that lets you know when price is either interested in pushing forward to the next level, or price is tired of continuing in a particular level and wants to reverse, right? So when this happens, this is basically a change of character, right? And what confirms the change of character? A change of character is confirmed by another break, right? Change of character is confirmed by another break in structure. So this is what confirms it, and then you can enter from here or you can enter from here. So typically the entry is always here, but then you can actually trade the shift of market structure without considering or looking at it like it is a change of character. You can actually trade it normally. So this is what I mean. Now, a shift is a very strong pattern, right? A very strong pattern that actually tells you when the market is like I said, about to continue in the same direction, or the market is tired of moving in the same direction and wants to reverse. So what happens is this. Okay, let's look at an uptrend first. So let us say the market is going like this, and then something like this happens. The market goes up and comes down, and then the market has failed to break this level. The market stops somewhere here and then moves up again. Automatically, this is a shift of market structure acting like a continuation pattern. All right, so what will happen is this: price is going to break above this high, come down, pick orders from here, and boom, continue the trend. right? You must have actually seen this in your daily trades. If you can actually check back some of your trades, you would actually be able to see this. This is how it actually will look like if it is in a continuation. The same way if you invert the scale, if I invert the scale, you see how it looks like on the downtrend. You can see it, right? So that's basically continuing a trend. How about reversing a trend? Now we can have something like this. The market actually moves, right? And then suddenly you have something like this. Market just comes down, breaks, comes back or picks orders from here, and boom, drops. Now this particular concept also works with the idea of mitigation. So mitigation, the knowledge of mitigation will actually help you understand or know where price is going to tap on before continuing in the newfound direction. What do I mean by that? Now, if a zone is being mitigated, this is what price will do. So let's say you're actually trading like this, and then this happened, you had a shift, but let's say price came here and stopped and you had a shift, right? If there are unmitigated zones around this area, price will use this particular high as a liquidity, come up, trigger this level and drop, right? Price will use this particular high as liquidity, and price will come up towards trigger this particular level before dropping, right? But if all the orders on this place has been mitigated, all the orders here has been mitigated by this move before the dump, price will react not from here but from here. Price will react from the order block that this second leg has before it drops. So it can see it actually works with the idea of like mitigation, right? It works with the idea of mitigation. So that is just it. If you've actually been following so far, you would see that it's a very simple concept. I'm going to show you how it actually looks on a real life chart so that you can actually be able to get familiar with it, and then you can actually do your back testing and find out more examples, right? So I'll do that in the next video. Hello everyone, you're welcome back. Stekris here, and we'll be continuing from where we actually stopped, right? So here is a very clear example. Okay. All right, so this, let's use current GBP price action to kind of like do a little bit of example. So we have this low, we have this high, we have this low, we have this high, we have this low, we have this high, this low, then we have a high, then we have this low. Now this low has failed to break this high. Remember, the low had already broken this high, so the low had failed to break this high and close above, and the low closed here, creating some kind of a shift. And now if this low had completely mitigated the order block here, there would be no need to actually pick orders from here. We'll focus on this particular area. But because that low, so I say low, the high, because this high did not really take out all the orders, we mark out our order block from here, and then what happens, price uses this particular high as the inducement, right? This is particular high as the inducement. So so we might see some down prices in the future on GBPUSD. It's already going down. Okay, this is another shift as well. You can see price failed to close above, right? So that one is the fake example, but then let's go to, all right, so this is another one, not really elaborate but also explanatory. So this is one, boom, boom, price failed to close, and boom, price broke this high. Automatically, price breaking that high has created a continuation shift and price is what going to what react from any other block that is available at that point, right? You don't react from any other block that's available at that point. So price reacted from one of these FVGs here, right? I don't know where, but one of it. So the same thing also happened here. Boom, 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 the shifts, and price came, reacted, and continued up. All right, look at this one as well. Boom, boom. Price has mitigated this other block here. Price has mitigated this other block, so there will be no need for price to what come beyond that shift. So that's why price came here after breaking this high. Price came and took orders from this other block before going up, right? Before going up. So those are just very, very tiny examples, but let me show you something very elaborate. All right, so this one is on what is on GBP USD as well. So this is our high, our low, this is the high, and this is the low. Boom, broke, right? Broke, and still it did not close above this high, which confirms that okay, yes, price is about to shift. The shift is basically when price basically changes structure, or fails to do something it's meant to do, based on what it's actually showing at that point. So this high failed to close above this high and came and then broke another low. And what can we actually see in the future? Use our knowledge of mitigation, we should actually be able to tell this particular order block was mitigated. I'm not here to teach you mitigation. I have actually done the video one time. This one is mitigated, but this particular order block is not mitigated. Forget the time frame I'm in, it's not mitigated. If you go down to like 30 minutes, 1 hour time frame, right? And that is the order block price choose before the main dump happens, right? Before the main dump happens. You can actually go on the 30 minutes time frame and verify this yourself. You would see it. Because my network is not too strong, I don't want to take that risk of going off the screen. All right, so this is also another one. This is also another one. Boom, boom, price refused to break below and price closed above, right? Price closed above. And where the price reacts from? Price reacted from this fair value gap here, right? I'm not here to teach you points of interest. It is all my highlights, right? Price reacted from this fair value gap there. So that is also another beautiful example. It's a lot on the chart, trust me. It's a whole lot on the chart. It's a whole lot on the chart. Okay, see this one. Still on GBPUSD. Can see it happened a couple of times. See this one. Boom, boom, boom. This high is supposed to create a new low, considering that we're on the downtrend right from here. This high is supposed to create a new low, but what happened? This high did not create a new low. It stopped here and boom, broke above, its high. So a shift has happened. A shift of market structure has happened, which also tells you that price is what ready to take a new turn, or price is ready to move in a new direction, right? So the same thing again has happened here. Because this other block has been mitigated, we can't really pick this other block. You can see the other block has been mitigated by this move, and it may seem like this other block below has been mitigated, but it has not. If you go down the time frame, so you're going to see that it was not fully mitigated, right? It was not fully mitigated. So that is why price actually was triggered on it and then went up. But then if you're not so sure, or because if you trader that sticks to one time frame, there is no problem, because I took this trade and I took this trade from this other block here. I did not take this trade from the other block below. What did I do? Very, very simple. When I took my trade, I made sure that my SL was below my invalidation zone. My take profit was in this high, and my SL was below the invalidation zone, and the invalidation zone is where? Below this low. This is the invalidation zone. If price ever goes beyond this, then my bias is what's wrong. If price ever goes beyond this, then my bias is wrong. And I was able to catch a 5 hour on this trade. I shared it some time ago. If you follow me, you would actually remember when I took this trade. So it's actually one of the beautiful trades I've taken. It was so simple. So this is also a way to trade it if you're not sure where price is going to react to, because you can be thinking price will react here and then price comes down to react here, or you can be thinking price will react here and the price just reacts from here and goes up. So the best way is to pick the nearest entry and then place your stop loss below the invalidation zone, and the invalidation zone is this level, right? So let's proceed. Something else also happened here again, same thing. We're on the downtrend still. Boom, boom, price refused to close below, created a mini shift, and price came down, picked the other block and went up, right? As long as you're not greedy and you're targeting objectively, you'll be able to take your profits around here. Or if you know that price is headed towards any of these mitigation blocks, these breaker blocks, you should be able to take your profits around here as well. So this is also a very beautiful example, right? Okay, very, very beautiful example. Okay, so this one, all right. Now this one too, boom, price created this high. Already this high had really it's already higher than this particular high, right? And price created this low, and boom, price created this high. This move alone has shown us that was price, because this is a double break 1 2, price is no longer interested in staying down, right? And now, like I said, this is where knowledge of mitigation is going to come to play. Most persons will not know that because this is a morning star order block, this particular trade has been mitigated, or this zone has been mitigated, and the only probable place that price may want to mitigate is this particular order block. And you can see price tapped on it and went up. If your order block was somewhere here, if your order block was somewhere below this last one, that is your own cup of tea, because you would miss that trade, right? All right, the same thing happened here. Very beautiful one. Boom, boom. Price supposed to create a new low, but price failed to create a new low. Price came and broke its high, creating a shift here, right? And because this particular low did not mitigate this other block, price came down and beautifully mitigated it. You can see that price came down and beautifully mitigated what this one is also very pretty. Used this particular level as its inducement, and that's a very, very clean pattern. All right, see this one as well. I think there's a continuation because you're on an uptrend, and then price boom, boom, and then started showing signs of downtrend, but it did not continue downwards. It went up again to take out this high. Now taking out this high has created a shift there, and because this is an expansion, we should expect our entries from any FVG or any breaker or mitigation block, and that is why price reacted from any of those there, right? That's why price reacted from any of those there. So it's a concept you can actually add. They're everywhere. Trust me. I can go on and on and on, right? They're everywhere. See this one as well. This particular low was not mitigated. That's why price triggered it. If a mitigation is going to occur, or how do they even put it? If price must mitigate up to the 50% mark for a proper mitigation to be said to have been complete, to be said to have occurred, right? Now, even historic zones, you may not really expect that price gets to, right? So this is also another one. Like I said, they're everywhere. You can't, you probably did not know it before now, but now you know it. They're everywhere, and boom, price reacted from the other block and went up, right? Okay, so let me also show you from one other pattern, Euro AUD. Although it's enough example, you can actually go on your chart and check it out. You use this particular model as an indicator to let you know when price was exhaustive or price wants to continue, right? So look at what happened here as well. Low, high, fail to break below this low because we are coming from a downtrend. Fail to break below this low and then broke above this high, right? Where does that leave us? That leaves us with a shift. And then what happens? Price what mitigates this other block and what shoots up as easy as ABC, right? Price mitigates this other block and shoots up as easy as ABC. Alright guys, so that was just gonna be all. It's not really a lot, but it's something that if you actually master, it can come in handy for you at some point. So you may want to actually do your further back testing to see if it's something that aligns with the way you trade, and I promise you'll not regret it. So if you followed through this video to the end, as usual, comment MVP in the comments. I want to know those who actually followed through to the end. You guys are my most valuable people, right? And make sure you follow to actually get content like this weekly. Also follow my academy page, Psychedelia. Follow my main page, Tech Christian. And I'll see you guys in the next video. Ciao.